Good morning, all. How we doing? I'm late. Late again. Oh, put my light on. There we go. How are we doing? Morning, V. Morning, Jules. Morning, Alex. Morning, Lee. Morning, Lee. That's not right. Morning, Andres. Morning, John. Andrew. Stevie. Sean. Virginia. Danny. How are we all doing? All good, I hope. Sorry, I'm just not organised this morning. Not ready. I'm running late. As usual. Morning, Henry. Outro. So I've got to get the DAX this morning. Not a lot. Just hovering up at the highs at the minute. Morning, Tim. Morning, Diamond. Happy Friday. Right. Got stopped out this morning. I put an aggressive drawdown control position on this pound CAD last night. Stupidly, assuming my broker wouldn't spread me out. So they did. Yeah, that was some fun. So got entered. There was my pending. My pending was under that low, basically. So I got triggered into my pending order there. Same candle, stopped out. So they spread it half an ADR, 45 pip spread. So that's cost me 1% today. Very annoying. So I've put the pending order back on. Pound CAD is flying up this morning. So yeah, I put that pending order back on, but that was really annoying. Really annoying. So that's where obviously that candle closed. Then we went down and came back up to there, but they decided to spread it all the way up to there. It would have stopped out anyway. So to be fair, I would have lost the money anyway. So it doesn't matter. But yeah, that's annoying. So starting the day 0.5% down, which is very annoying. Closed out some nice profit. Yeah, had to make a loss. Morning, Lee. First time here. Welcome aboard. EC flying up too. Yeah, probably the Canadian dollar dropping, I'd imagine. So just a quick overview of what's going on with the EA set files. The ADR set file is running at 1.9% yesterday, did 2.2% yesterday. So we had a load of reversals yesterday across the board. So sitting in 5% drawdown, 10% banked on the month. That's going well. H1 obviously still sitting in 4% this month. That killed me that day, but that was partly my fault. Took 5% loss, which I shouldn't have. So that should really be sitting on 9% with the EA, which isn't really a fair representation. But sitting in 10% at the moment. The only thing really which is not worrying, but the only thing that's getting annoying there is the pound CAD, which I tried to get out of and obviously got stopped out on this morning. The H4 set file is sitting in 3% this month. Not great. We still haven't had that many H4 reversal alerts, so it hasn't had much opportunity to make a lot of money. But we've had a 5% loss on Wednesday. So during that squeeze, obviously all the set files took a hit, as they will in a squeeze. So 5% on that, sitting in 5% drawdown. The H1 hedging set file, sitting in 22. That's been sitting there for ages. It seems to be sitting between 20 and between 15. Well, 10 and 25 is kind of where it sits permanently because it's always in something. It's banked 9% this month, so not too bad. Last month, obviously, it banked 20 plus, so it's well in profit. But just sitting in some DD at the moment. Swiss yen is in 3.34% because it's shorting. And obviously the yen's gone crazy today. So that's where all the set files are sitting. Pound CAD's just taken out the high of the session. So hopefully that was just a rally to take that liquidity. And now they will collapse. See where we go. DAX opens in 2 minutes. So at the moment, the DAX is sitting up at those highs. Downside targets and upside target. So upside target is high of the week, last week. Downside target is exactly what we said yesterday. So yesterday we were looking for it to come back and retest that area, which it did, and then it pushed back up again. So we're just sitting range bound again. No directional bias at all on the DAX. So this is day, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, pretty much day 11 sideways. We're not going anywhere at the moment. So if we do get up to that high, we're looking for shorts, but we'll see where the opening range break goes. Overnight, we had earnings. So last night was Amazon and Activision were the main ones, with Gilead and Intel and Pinterest and Snap. There's loads of that, loads last night. We've had Axon, Chevron, and Aon, Chevron, and Exxon pre-market. So that's all done now. There's no aftermarkets today. So I didn't actually see what the earnings were. We'll have a look at all this in a minute. I need to just scroll back and have a look at the news. So markets open. There's your pre-market 15 range there. Loads of targets to the downside on this. Go and have a look at. We've got loads of ADRs as well. Like the yen obviously has gone mental on the overnight news. So as I said last night, watch your yens. Hopefully you did. So we'll have a look at all those in a minute, but that's gone absolutely crazy. I just want to go and analyze the news, but just watch the open at the moment. We'll look at all the ends in a minute. Morning, John. What's the single worst loss you've ever taken? I was thinking about this morning, actually. I think it's about 9%. Somewhere around about the 9 to 10%. Basically just gave up on the pair. So, which put me down for the month, basically. So lost month, but. Position trading, that is, obviously. Worst loss I've ever taken is blowing accounts like everybody else, which is a thing of the past now, hopefully. Morning, Chris. UJ seems to be in a sell zone. Morning, Kennelly. Yeah, we'll have a look at all the yens in a minute. They're all crazy. So just testing yesterday's high on the DAX, straight through it. So we're looking basically for upside targets today. We'll see where this candle closes, but potentially we're looking for upside targets. We've got 46 points to the upside. That brings us up to 159.26. Got 2.5 minutes to close on the candle. Wow, that's a nice one this morning. Anybody get on the pre-market this morning? That's very nice. That's probably target hit, isn't it? 24. Yeah. Yes, 1.5 hour on the opening range pre-market break. Pound yen weekly range hit. It is Friday, so we don't really care. Very nice opening on the pre-market. I'm taking the 5 this morning. Should have taken the pre. Morning, Michael. Outro's on the pre-market 5. Wow, blimey, that's even better. Outro's killed it. So Outro will be in somewhere there. Go away, line. I want to get my fib. I'll stop snapping. So annoying. Yeah. That's a 2.5 hour. Outro, well done. Nice candle this morning. Them's the ones you make your money on. Right. So we'll just wait for that candle to close. Still got 1 minute left. I'm just going to quickly look at the news. So going back on the news this morning. Right, so Amazon, Intel reports largest quarterly loss in the company's history. Blimey. The loss per share was slightly better than soft Wall Street expectations. Stock rose over 3%. Okay, so it's a big loss. They were forecasting the loss, so it is actually a positive because it would have been factored in that the loss was coming. So, okay, that's fine. Amazon shares jumped more than 10% as cloud advertising units data revenue. Right, so Amazon's had a big hit. That's good. Snap plunges on first quarter revenue miss. So it's mixed results on these. Fed bank Fed discount window loans 73. Fed emergency bank loans. Blah blah blah. Right. Right. So Japanese jobless 1.32 on a forecast of 1.34. So that's not too bad. So that's good. Tokyo CPI 3.5. So their inflation has gone up. In Japan, unemployment rate has gone up. Not good. So the CPI is northbound. Right. Okay. It's not changing the yield curve yet. We continue to expand the monetary base until the year-on-year rate of increase on the CPI exceeds 2% and remains steady. Continue to expand the monetary base until increase on CPI exceeds 2%. Withdrawals for guidance. Right, okay, so Bank of Japan withdraws forward guidance that promised to keep interest rates at lower levels. So again, another hint there, interest rate rises from the Bank of Japan. Ueda, we have decided to maintain easing. We won't waiver the ease of monetary policy until necessary. Review of monetary policy is 1.5 years. Policy shift might happen in the next 1.5 years. Really? Okay. Right. So, Bank of Japan rate remained at minus 0.1. So no change, but they are hinting that that is going to change. So we've been there since 2016 now. So this is for 7 years. They haven't changed their interest rates. Their inflation is going up. Their unemployment is going up. Unemployment going up means that they don't want to increase their interest rates. Inflation going up means they do want to increase their interest rates. So it's a tug of war between the two, basically, as to whether or not they increase that. So they've decided not to do it this time around, but they will potentially do that. So you can see there's a rise in inflation. The more inflation goes up, the more interest rate pressure there is. That means they have to increase the rates, which makes their currency more attractive. But moving from 0.1 to 0 still doesn't make you anywhere near as attractive as everybody else in the world. So everybody else in the world is sitting up between 3 to 5% on their interest rates. Bank of Japan is sitting at 0. So obviously, when you look at the market's reaction to that, oh, look at that. Right, so I'm long on the DAX. Fantastic. What a lovely treat this morning the DAX is. So if you didn't get on the pre-market break, you're in straight into drawdown on the 5-minute ORB. Let's hope that that actually just sits back on that high and then pops back up from there. So you can see from the ADRs, we are massively moved across the board. So everything's popped against the yen. So basically, they've decided not to do anything to make their currency more attractive at all for the next potentially 1.5 years, which is utter rubbish. And mind you, saying that, they've been stuck there for 7 years, so why not any different to that? 225, look at that. So Aussie dollar yen, huge extension to the upside. You're going to get ADR hits, you're going to get RSI hits, you're going to get everything hit today on all these yens. So CAD yen, massive extension to the upside. Swiss yen, we're off above, up in the clouds. So this is goodness knows what that is. It's 250, isn't it? Yeah, so about 250 ADR. Swiss yen. It doesn't go any higher than that. We get above this level 2% of the year. So this is unprecedented. Euro yen, 225. Pound yen, 225. New Zealand yen, 175. US dollar yen, 225. Yeah. So huge moves. There will be a lovely mean reversion back into this area. Yeah, potentially. But potentially the market might just rally for days off the back of this. So just be very careful. I'm not going to do it because the whole purpose of having these running, these EA's accounts running, is so that it takes every trade, so that we can show every trade that the EAs are taking. And obviously any trades that you take, you should be in very similar to what this has been taking. So I'm not going to do this on these accounts, but I won't be taking any yen mean reversions at the moment, personally. Just because when you get these shifts, if we go back and look at the Swiss as an example, yeah. Is that it? The 4th of November, that's it. So this is an example of when there's a fundamental shift. So this is the Swiss franc. When you get things like interest rates changing unexpectedly, or you get things like we're not going to bother to do anything about our currency spiraling out of control, like the yen's just said, you get a big fundamental shift. You get orphaned propulsion gaps, where we basically just go, nope, we were fairly bullish on you, and now we have switched bearish. And you can see, obviously, what happens. There is a complete shift in the direction of the currency from bullish to bearish. That's potentially what we've got going on the yen. So you can never tell whether or not they are going to come back and rectify these when they happen. So there is another good example. Yeah. When you get these big news events, quite often you will have days or potentially weeks of movement in the same direction. With the yen, however, at some point, they will get to, we're not having this anymore, and they will step in and they will do exactly what they did before, which is an intervention, which is there. Yeah. And as you can see, bang, suddenly the yen powers up. This is the opposite intervention. So we're going back up the other way. We're going to fill all these propulsion gaps now. So whether or not it comes down today is entirely up to you whether you want to take it. If you're going to try and mean revert any of this, just be prepared to get into a squeeze. It may or may not happen. Obviously, no one can predict the future, but we know propulsion gaps get filled, but we also know that propulsion gaps formed on fundamental events disappear and they never come back. So just be a little careful with these. You need to wait for some signs of weakness coming through. So wait for the reversal alerts. M5, you're probably going to find you're going to get some which are just going to break and then invalidate immediately. But then again, you might get them break and come straight back down and fill. So there's an opportunity to make an absolute fortune on the yen today. There's also a possibility that it might go into a squeeze. So just be careful with them. I'm not going to take any of these myself. I'm out of the yen at the moment. I'm flat. So the EA will take them though. So we'll see what happens. We'll see how they unfold. Yeah, so huge extensions. You're going to get hourly extensions. You're going to get 4 hourly extensions. You're going to get alerts on absolutely everything to do with these at the moment. So similar sort of move playing out, 2 or 3 day push after the move, but equally the market could react in completely the opposite direction. This afternoon, we've got the Canadian GDP and we've got PCE for the US dollar. So PCE is a dumbed down version of CPI, which is obviously what drives interest rates. So if we get interest rates going up, or rather we get a positive PCE figure this afternoon, that will put pressure on the Fed to increase interest rates further, which will be again bullish US dollar. So if we get a bullish US dollar off the back of this weakness on the yen, we could be looking at 300 plus ADR day today, couldn't we? So just be careful with these yens. To depends how you look at it. Everybody's going to look at everything in a different way. You could look at this as a massive opportunity to short. You could look at this as a, right, I'm going to get in on a pullback. But your pullback will probably be a flag. So quite difficult to pick a spot on the way up to come back down into. So that's the obvious move. That could be a nice little long opportunity there. They may add into the positions there. But tricky to tell. Thanks for the follow, Kate. Welcome aboard. Oh, yeah. Sorry, I filled my water bucket up. Right, let me just catch up on the chat. Let's have a quick look at the DAX. Yeah. So we're just filling the initial propulsion move at the moment. When you get ORBs that wide, we quite often find that we sit and muck about within them for an hour or so. So this might not actually go anywhere today. That might be a false move, though. We might break to the downside. So see what happens on that. So there's your ADRs. So Aussie dollar yen, CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand, and US yen. They're all exactly the same story. Entirely up to you if you want to take them. I have no idea which way these are going to go. They could all just mean revert this afternoon. But judging by the strength of the movement and that push, this doesn't look like a speculative move. This looks like a fundamental shift to me. So you just want to be a little careful with these. I'm not quite sure what the EAs have got on yen-wise at the moment. Got a yen long sitting on the Swiss yen on ADR. There's no yen exposure on the hourly. No yen exposure on the 4 hourly. Pretty sure there'll be yen exposure on this one because it's hedging. Yeah, 4 yen longs on, you see. So that's going to get into a little bit potentially of trouble. I think those 0.4, 1.7, 237, 3. Yeah, so 3, 4, 5, 6, 7, 7.5% of that is yen. Yeah. Again, this is a really good lesson in exposure. That's what happens when you overexpose yourself to something that goes into a squeeze. And this is potentially the start of the squeeze as well. So 7.5% of drawdown day one. Not good. So just be wary. Right, so that's the ends. Looking at the RSIs, probably going to look very similar. Oh no, there's nothing there. So quiet at the moment on the RSIs, as you would imagine. So everything that we've been getting into over the last week or so that's been through these squeezes has all started to unravel yesterday. So all these RSI extensions that we had as opportunities are obviously all starting to play out now. So we've got the pound yen on at the moment. So that's just starting a little bit of a pullback at the highs there. Look. So we are just starting to roll over on that one. So that's an hourly RSI extension extended on the 21. So the EA will get into that potentially. So that is 70. That's not extended yet. So there won't be an entry on that just yet because we haven't got the 75 extension. But my settings are 75 for the H1 on the 21. So I won't be getting into that yet. But we are starting to show some signs of weakness up there. So, you know, this could completely reverse back down to some kind of support and then fly. You never know. If it does, obviously that's a massive profit. There's a 1.5 ADR move, or at least an ADR move back on mean reversion. So there's a serious amount of money to be made on these if they revert. 50-50 shot. New Zealand dollar yen. So that's extended on the RSI as well. Just got above the 70 on the hourly. Obviously, that's based on that move for today. And the US dollar yen as well. That's extended, just about to get extended on the 75 level as well. So we have got 2 potential triggers in that one and that one. We need another hour of push. If we can get another hour of push and get above those levels, then we'll get some shorts on those too. But that's it on RSIs. Oh, Dax, what are you doing, man? Okay, stopped out long have gone short. A whippy one today. Stop loss at break even outro. Stop loss locked at 2R, taken out at 2R. What a shame. Only a 2R. Well done. Good job. Lee, pound yen looks lovely for a short on M15. Yeah, could be. That's a long way to go, though. You're not going to get a reversal alert on that until you've come back all the way down to there, which is basically just, it's 1 ADR. So you're not going to get a reversal alert on M15 until you are 1 ADR down. You've missed a whole average daily range worth of movement before you even get an alert. And by the time you get an alert, you're coming straight into where the bull move started. So I would be looking, if you're going to take these, if they're ADR reversals, you want to be taking these off of M5, not off of M15. Even M5 is a little bit large, not that bad. 80 pips, just over half an ADR. So up to you on these. I mean, I've made a fortune on these before. I've also been stung hard. Yeah, so it's always down to you. Basically, as I say all the time, it's not how you get into a trade that's important. It's how you manage the position that you're in. Yeah, so when you're in the trade, if you're going to take this trade short, don't overexpose yourself on them. Just get into one, maybe two, whichever one gives you maybe the first reversal alert that's extended on the M5. And then manage the trade like any other, but be prepared. Yeah, look back when we get these big fundamental moves. Yeah, so this is a 250 ADR roughly. Yeah, so look back at when we've had 250 ADR moves. There's one there. Look, what happened afterwards was it pushed down for a second leg on the next day and then did a 50% retracement and then accumulated for a week before returning to source. That could happen very easily. However, you could also get an absolute flyaway new trend starting with the yen being super, super weak. One of those two things is going to play out. You don't know which one it's going to be. So just plan for both. So if you're going to get into something like the pound yen short, for example, jump out, have a look at where your resistance is. So we've got resistance potentially coming up there. And then we've got another resistance coming up there. Right, so we're at resistance. So this is beautiful. So technically, this is a great spot to be shorting because we are likely to be running into potential sellers here. If we're not, that's where you're going to get your next move, and that is 298, so 300 pips away, which is 2.5 ADR roughly. Yeah. So if you get in here, just plan for 2.5 ADR of movement against you. So if you're going to scale into this, I would probably go 1 ADR apart. Don't get too aggressive on it. Yeah, because if this just does that and flags and goes, you're not going to stop until you get there. Very unlikely. So just plan for it. As long as you know what the potential outcomes of every trade you get into are, you can plan. If you just get in blindly and hope, you're going to struggle, aren't you? So, morning Minpo, morning Dreska. And now short the DAX. Oh, hang on. I've skipped a load of chat. That just scrolled through. Small mean reversion and flags usually. Yeah, so they basically all... So look at that as one flagpole. Your flag will be... Usually a flag is less than a retracement. So your 38 retracement, which would be your shallow pullback, yeah, you would look at a flag to be less than that. So if we flagged back down into here for something like that, that's what you would tend to see. That's a pullback. That's a deep pullback. So a flag is basically quite often just an accumulation pop or a slight down channel accumulation. which is basically a profit take. It's the market running out of steam and going, right, well, let's take some profit on what we've got so far and then wait for some more sellers to come in, because the sellers basically will see the flag forming and go, oh, look, it's going short. They will drive in short, put their limit stops above the highs, and then they'll basically push off to the next leg because they've got more orders to trigger. So is it best practice to wait for the reversal to confirm on the 4 hour before taking a trade? No. Well, I don't know. It depends what strategy you're trading, doesn't it? If you wait for the 4 hour reversal alert, you've missed the move. H4M15 is basically using the 4 hour RSI. I don't think you've understood the strategy, Lee. H4M15 is H4 RSI extension entry on M15 on a reversal alert. Yeah. H1M5, you are using the hourly RSI extension, and you are jumping in on the 5-minute reversal alert. So you would get in when the market is extended. This exact trade here, look, this one here. That's the entry. That's an H1 RSI extension M5 reversal alert. But you could wait for hourly. If you wait for the hourly RSI, the hourly reversal alert, yeah, you're trading the hourly swings, aren't you? But you're not using any filter from a higher time frame. Put a short on US dollar yen last night. 200 pip hit. Yeah, more than that now, I'd say. It depends where you put your short on, but yeah. So, I mean, depending on where you got in on that one, Stuart, I mean, I don't know why you would have got into that, but you need to scale in and hope that they come back to that propulsion gap. EA just longed many US dollar yen. No. Now short on the DAX and out. Good. Out already? Blimey. Outro's killing it this morning. Yeah, so I'm short on the DAX at the moment. Trailing down. Lee, have a 2-day trade running Euro New Zealand shorts plus % on the trade manager dashboard. Only trade running. That's always good. Euro New Zealand short. Very good. Euro's coming down. We'll have a look through all the pairs in a minute. Do an analysis on everything. Yeah, Euro New Zealand's, I've got 2 shorts on that at the moment on the H1M5. Nice move on the DAX. Shame about that. Stop out. That's unfortunate, that one. But so downside targets, lots of down here. Oh, by the way, this indicator, the MT5 version is almost done. I've just got a few little niggly bits to finish on it, and then it's done. So I'm hoping they'll be done today, but it won't be out until next week. Ooh. Just so you know. 1 hour day total so far. Very cool. Followed your bootcamp strategy, so feeling very good about the 1 R10. New Zealand dollar yen 175 ADR. Don't know what that means. Sorry. What do you think about a target on the Euro CAD for a short? Well, so 225 ADR to the downside. We've got this monthly level as well here, which potentially might act as support. So if you go out and have a look So what we've done is we've broken. So the market structure is very obviously nice and simple on this one. Up to there. So your pullback is either going to be as shallow to resistance, previous monthly resistance, or we're going to pull back to the weekly resistance, which is there. So if you stick a fib on this and look at what the retracement levels are on it, 38 shallow retracement would be back down to that monthly test. The deeper retracement at 61.8 back down to that weekly. On that weekly there is a 71.9. So those are your two options. There's nothing around 50 to give you confidence at all, really. So we can ignore the 50%. So 61.8, 71.9, or the 38. So watch this area here, which is ADR today. So ADR today to the downside, I'd just be watching that area. Average is there. That's 44. So that's my exit, really, ADR. So half an ADR is that. But there's potential for it to obviously come all the way back down there. It really depends how much of this move they're going to unwind with the Canadian dollar. What happened with oil yesterday? Nothing. Terminal gone. Yeah, so my oil trade, basically, I'm still in. Nothing happened yesterday. We just went sideways. So I'm in from here. Second entry plan down at 125 ADR, which is that monthly support. So still sitting in that one at the minute. So no news, so no movement on the oil front yesterday. So DAX is likely to start its pullback. So yeah, it really depends how much of this they do, doesn't it, as a pullback? What you have to think about as well is we've just pulled back into support. Look here. So that was where we stopped that move and we went into that tiny little flag break. We've bounced 3 times here. Yeah. So if we break that low today, 3 bounces and a smash through, we're coming down. This could be the bounce. So what we could be looking at here is just a flag break long. Really, really, really difficult. I don't know what's happening with that one. Four-hour time frame and the hourly time frame doesn't matter. It's the same thing, isn't it? A retracement is a retracement. Whichever time frame you're looking at, the levels are exactly the same. Oops. Whoa. So I'm just trying to scroll through chat and it keeps flipping away from me. Morning, Amar. Amar has come straight in and asked for it. Here it is. Gold. So, what's going to happen with the US dollar this afternoon? That is the question. At the moment, we are in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-day sideways move. Where's Thursday gone? Good. So yeah, 10-day sideways. Stuck between a rock and a hard place. I know. At the moment, it's going down, which I would imagine is because the US dollar is going up. Correct. So US dollar's pushing at the moment. Obviously, we know it's pushing against the yen. So obviously, it's coming down. So depends what happens this afternoon with the news. It's either going up or down. We've got this propulsion gap here, which has been tested, which is also formed your weekly low from last week. We're sitting down at the 2-week low at the moment, which is where we bounced yesterday. And we've got this propulsion gap target to the downside. So to me, positive news short down to there. Negative news come back up into that propulsion gap, which is 150. I don't know. Depends which way it goes, doesn't it, this afternoon? We've got the Canadian rates this afternoon as well. Oh, sorry, not the Canadian rates. We've got the Canadian GDP this afternoon. So that will have an impact as well on the US dollar. So these guys always interact with each other. So we've got two strong pieces of news with the PCE and the GDP coming out at the same time on both of those pairs. So if we get positive GDP for the CAD and positive PCE for the US dollar, we should get a good pump on both of those this afternoon. So that would take you down basically to ADR, which is the monthly low. That's what I think, but I don't trade it. Morning, Nuno. Morning, Shroud. My dashboards are amazing. Currently manual trading. Well, they're not that amazing, are they? They're literally just alert systems for RSI. I'm glad you find them amazing, though. It's nice to hear. It's amazingly simple, isn't it, trading, when you got tools that tell you what's going on? One of the biggest problems with traders is over trading, looking for opportunities to get into the market. If you just sit there and wait for things to ping up in front of you and go, there's an opportunity to get in the market, it makes everything so much simpler. Marco, pound CAD is killing you. Right. So you 1, 2, 3, 4, 5 positions on pound CAD at the moment. So Euro CAD, obviously, we had a little bit of a respite on that. The pound pairs are all rallying again today. This pound is uncharacteristically strong at the moment. I'm not quite sure why we've got so much. Well, obviously the yen is a thing, but I'm not quite sure why we've got so much strength in the pound at the moment. We had obviously the positive news on the pound last week with the CPI figures. So we were expecting CPI to drop below 10%. It didn't. So that means we've got to put pressure on the interest rates, which means the pound is going to become more attractive. So that is rallying. The Canadian dollars obviously had the drop on the oil pricing. So that has been dropping. And this is, as I say, the Euro CAD and the pound CAD have been the perfect storm, really, over the last couple of weeks. So this is kind of what I was talking about with the flag break on the euro. Potentially what we're seeing is a flag break. So yesterday's high is going to be the key. Previous day's high, which is high of the week, is going to be the key level this week, today. So when we get up and test this area, if we get up and test this area after this reversal alert, that is really going to tell us whether or not we're potentially going into another leg up. If we are, then aggressive drawdown control is needed. I am actually getting into an aggressive one on this anyway, which I shouldn't really be doing because this is the EA demo account to show the EA in action. So kind of shouldn't be interfering with it, but I am. Because I also want to show doing drawdown control. But yeah, this is the time to do it. So one of two things is going to happen with this pound CAD. We're either going to flag and break and go. The second leg is generally smaller than the first. So you'd need to factor in that we've got maybe another couple of ADR move to the upside. On the 4 hour, got to come out to the daily to find resistance now. So the 4 hour and daily sort of resistance is here. So that's where we've kind of pushed up into there before we flattened. So if this is going to be a push, flag, push, that's where I'd expect us to get to. That is actually 300 pips. So that's 3 ADR. So you've got potentially another 3 ADR a squeeze on it if it goes. So today we're going to see one of two things. We're either going to see a new low form. So we're going to put in new bearish market structure, which means we're fine. And then we'll come down and retest these propulsion gaps at some point. That's your monthly. These are your previous weeklies. So this area down here is where I'd expect us to get to, which is 175 ADR away and that propulsion gap. So that's ideal. That gets me out of the positions. Absolutely fine. If it does break that level, we may well get a little stop run at ADR and then come back down again, which gives you your uneven M pattern reversal. So it's still not the end of the world if it breaks that high today. Maybe just taking liquidity and then running back down again. Or we break, flag, and go, in which case then you're looking at potentially a 3 ADR move to the upside. So that's the situation. That's what you need to plan for. So an aggressive DD control position on this. So the EA has got 3.78 on this at the moment, sitting in 3.1 drawdown. So I've got a 3 teed up there, and I'm just dragging that up. Basically, you can see what I'm doing with these aggressive drawdown control positions when I do them. So I'm looking, basically, I put an order in the market under normally the last hourly level. Why did that not move? Oh, it did move. So I normally use the last hourly candle, or M15 basically is kind of what I'm doing. Look, your M15 reversal alert typically is going to be on a bearish engulfing on an hourly candle, basically. So it's pretty much the same thing a lot of the time, depending on how the market moves, obviously. But so the entry below the last hourly candle is then going to be the M15 reversal alert. So I'm looking for a good, strong move to have actually happened. What typically happens when I get into aggressive drawdown control is I immediately go into drawdown on that position, because I'm getting into it when I've had a confirmation that we've got sellers on board. I don't get in here as we're going up, which it would be an absolute beauty. If you got in there and you put your stop just above the high, assuming that we are either going to put in a lower high or double top, that is the tightest possible aggressive drawdown control you can get, and that is absolutely spot on. But the chances of it working are a lot less, obviously. So I'm waiting for a sign that we've got sellers on board. So something like that. Yeah. What tends to happen after you take out a low? They pull back. This market structure, when you take out a low, then pulls back and then makes a new low, then pulls back and does that. So as soon as I get into an aggressive position, typically what happens is it comes and tests the propulsion gap and then drops down. So that's the entry. But if I see it pushing, what I want to do is obviously get in as close and tight as I possibly can. So as we see a big, strong bullish candle going in, move it up. And I'll be getting in on a break of that low. And obviously stop above the high, or I'll adjust it up to there, depending on what the risk is. There's no rules for this. It's basically what you fancy. So that is 1.3% loss. That would be 0.8% or 0.9. So difference between 0.9 and 0.4. It's, aggressive drawdown control positions are either going to work or they're not. Yeah. So what you're saying is, I am assuming you're going to put in a lower high. If you don't put in a lower high, I'm going to stop out. If you're thinking you may do that and put in a double top, you want your stop above there. But then maybe you should wait. Again, you never know, do you? So this is the difficulty with teaching this sort of stuff, because there is every situation you get into with a drawdown is going to be completely different. So you just got to manage it as you see it unfold. And there is no right and wrong. It's a trade. It's a stop loss trade like any other. The chances of getting stopped out are high because you're using a stop. The market hunts stops. So wherever you put it, it's going to be above a swing high. So it's either going to be that type of reversal or that type of reversal. If it's that type of reversal, you're dead. If it's that type of reversal, you survive. Nobody knows which way it's going to be, which type of pattern reversal it's going to be, do they? So there you go. Pound CAD. What did you say would be a good fib retracement on these yen pairs? Well, it's the same fib retracement as always, just a standard fib retracements, basically. So measure the move, and 38 is shallow, 50 is 50, 61.8 to 71.9 is a deep pullback. So when you're thinking market structure, when something pushes, it then pulls back. So the pullback is either shallow, mediocre, or deep. As long as you're making a new higher low, you have market structure. Bullish. You never know which it's going to be, which is why fib retracement trading is so difficult. And people try fib. People think they found the holy grail with the fib. I was the same. Then you suddenly realize that it's a complete lottery as to which of those levels it's going to touch. So when you actually look at that and measure what that is, you'll probably find it's roughly half an ADR, which brings you back to using ADR because it has an average daily move. So if you're measuring a movement, you are measuring a number of days worth of movement. That will be somewhere around 1 to 2 ADR. Therefore, a 50% retracement will be somewhere between half to 1 of an ADR, which is why we always target within an ADR, because any kind of retracement move is likely to be within half to 1 ADR of movement. So yeah, any of those, take your pick, but always look for confluence. So pound yen, for example, if I'm looking for confluence, I have a weekly high at 50%, which is the top of a propulsion gap. So if I was going to say we're going to pull back on this, that is the obvious point, because there's going to be limit orders sitting there ready to trigger on a new leg. This is where that initial SPY move started and ended. They then pushed up a little bit more, couldn't push back any further because the buyers were holding in that position. So there's buyers there, we know that. There's buyers there, we know that. And it's a 50% retracement. All the fib buyers are going to be getting in there. So to me, a 50% retracement would be the obvious point for a bounce. Because we've got confluence with 3 different things happening there. And if you look and measure that, it's 146 pips, which is just over an ADR. So if we've had a two and a bit ADR move to the upside, the 50% retracement is an ADR of movement back down to the downside, isn't it? So all adds up. However, you've got this area here, which is the accumulation break. So that is an opportunity as well. But stick your fib on there and you'll probably find that's a 61.8. To the pip, virtually. It's all, you know, however you think about the mathematics and the theory behind Fibonacci, it works, and it's always mathematically pretty much there or thereabouts. There's always an argument for every level, which is why fib doesn't work, because when you think about it, whenever you put a fib on, well, it's why it doesn't work, and it always works. Whenever you put a fib on any move, there is always going to be a logical reason for these levels to be retraced to. You just don't know which it is. And again, that brings you back to if you use a stop loss, you're always going to get it wrong on one of them. But then, you know, what a lot of people do is go, well, I'm going to assume it's going to be the 38. If it doesn't, and it comes down to the 71.9, I'll get out. So that becomes your stop loss, which gives you a 1R on that. When you get a push out the top, that gives you a 1.5R. So, you know, fib trading does work with stops. It also has a high failure rate. And it's whether or not you can hold it. And this is the problem, isn't it, with every stop loss strategy. Whenever you have a stop loss strategy, if you get in, wherever you get in, like say get in there with your stop down there, as soon as you get to that level, you've got a 1R, right? So the last trade that you lost you 1R. As soon as you get back to there, you've got a 1R. So you've got the opportunity to put that money back in the bank. Your brain is going, phew, I haven't lost that money. And then what happens at this level? It hits that high. Because there's limit orders triggering there, it bounces. So the first thing you do is go, oh my God, this thing is going to come back down again. So you protect your position with a stop at break even. One of 2 things is going to happen. It's either going to do that, break even, and then go, and you're going to go, I'm going to get cross. You're going to take the breakout, but then it's too late. It's going to pull back and you're going to lose again. Or it gets there and you bounce and you go, oh my God, it looks like it's coming back down again. I'll take it. So you end up taking a 0.75 R after having a 1R loss, and you have a negative risk reward ratio. And this is why stop loss trading for most people doesn't work. It's not because the strategy isn't right. It's because your brain tells you to get out of your trades too early or to protect them with a stop you know has got a very high probability of getting out at break even with. So you either take no money or less money than you lost. You have a negative R. That's the problem with stop loss trading. If you were to get into a position trade on this, assuming that you are now bullish on everything against the yen, what you do is you take a position there as it comes down. And if it doesn't bounce there and it pushes down further to here, you take a second position. Highly probable that if this is going to be a pullback long, one of those is going to hold. So you take one there, your average is there. As soon as you get a tiny little push up, you can get out at break even if you want and lose no money. But the thing you're eliminating is your loss. That's why position trading works. There you go. Quick lesson in fibs. Diamond. Oh, I know. Today, US dollar will move either up or down and may reach 100% ADR or not. Yeah, you know me too well, Diamond. Hey, who's that bloke on YouTube that does loads of analysis but never actually gives any analysis? Oh, that's Lee, yeah. The only reason I don't give any analysis is because I don't know where it's going. I just have accepted the fact I don't know where it's going, and that's why I make money. The US dollar will go up or down and move through time. That's what we know. The truth of trading. Very vague, isn't it? As long as you know, this isn't my whole point, isn't it? As long as you know where it's going, you can plan for it. But that's what people don't do. They don't plan for it. So the pound yen, where did we look at on the daily? Was it a different pair? No, there you go, pound yen. So the pound yen is probably coming up there. So it's either going to do that or it's going to do that. As long as you know what the two outcomes are, you can plan a trade to escape it. That's the whole premise of position trading, is not that we have a crystal ball. We just have created an edge in the fact that we have no idea which way it's going. However, we know how it moves. If you know how something moves, you can predict its movement. It's when you try and predict its movement and it goes a little bit further than you expected it to, at least then you can predict what the next thing is. So it's just using your brain and not letting the banks take all your money along the way, isn't it? What about pound yen? I've already covered pound yen. I'm on it now. There you go. I'll just give you analysis for pound yen. Have your magic 8 ball ready? Yeah. Where is it? There it is. Oh, that's a coin. That's not the 8 ball. Where's the 8 ball gone? There he is. No, that's a Crocs. There's the 8 ball. I've got too many John Wicks. I have got far too many John Wicks. I haven't had him out for ages, have I? Big nose John Wick. Spam John Wick. Well, that's spam John Wick as well. He has got a spam, hasn't he? For those not in the UK, spam is a big forehead. I don't know if that's the same around the world. Pound yen 225 ADR, something? Yeah. Simi, rather. So yeah, your mean reversion opportunity on this is obviously just take this 5-minute reversal alert here. So we're contracting at the moment. Depends how far they want to push this yen today. Certainly not having a good day, is it? So, Michael, which time frame propulsion gaps do you target the most? Hourlies. So M15, you get lots of them. So there's two. You can use M15. So within the indicator, you've got a strength, propulsion candle strength setting, which I have to 0, which basically draws every propulsion move. So it gets quite overwhelming on lower time frames. So pick something that isn't going crazy. So you can see there's propulsion gaps all over the place on M5. If you adjust that and make it a little bit stronger, so maybe put it up to something like 3. That's still not strong enough. Go 10. Yeah, so that weeds out a few of them. Go even stronger than that. There you go. So if you're going to go down to smaller time frames, if you use a much stronger propulsion gap setting, that will wean out the propulsion gaps for you, so you get less of them and it becomes less cluttered. Because there's a lot more movement up and down, a lot more propulsion. Thanks for the follow, Sukraj. Welcome aboard, Sukraj Limbu. Good name. So yeah, so you can fine tune it, but hourly, you see there's nothing there on the hourly now with that setting. There's a few, but nothing, not too many. So if I drop that back down to normal, the hourly has is a much more smoothed out. It's the first time frame, I think, which is smoothed enough for you to really clearly see market structure. So this is the time frame I concentrate, as you know, on the very, very lowest time frame I use for analysis. So these propulsion moves are much more likely to be banks pushing hard in one direction, which is why I prefer this for using targets. And you can see they are very, 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 very well respected on the hourly. Yeah. So like from where we came down here and we did this little accumulation and pushed away, that was the very first propulsion gap. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days later, we came down to it almost to the pip, and then we shot off again. And then we got this one up here, which took about 2.5 weeks to come back to. And in between that big one there and that one there, we had loads of other propulsion gaps that all got filled on the hourly. So you find you get a lot less orphaned propulsion gaps on the hourly chart. When you drop down to lower time frames, you've got so, I mean, this is, again, EuroCAD is a bad example because it's a squeeze, but you've got so many targets there. 4 hourly, you get a lot less, but you get more orphaned propulsion gaps on the 4 hour. So I find that the hourly is just kind of the sweet spot. I'm not quite sure why, but it is just, you know, you just eyeball it. You eyeball it on the 4 hour and the hourly, you know, and when you eyeball it on the hourly, you just see more of them getting filled. You get the odd orphaned one that gets put into place. So, you know, on a big strong move like we've had on the euro, these will get filled at some point. It will come back and it will do some kind of retracement, probably back down into there. May never get back to that one. But the hourly just seems to be the better one to use for me. Just from eyeballing, basically. Could you please share your thoughts on pound odd? It's not really extended at the moment. Yeah, no, it's 4 hour extension, isn't it? I think I've already done pound odd, haven't I? So we're just coming up to the highs at the moment. So we're challenging the previous day's highs, coming up to ADR. This is obviously high of the week, high of the month. It's a massive long at the moment. So yeah, short. Nicely extended, 4 hour. I've got 2 positions on this one on the H1M5 strategy at the moment. Had to do drawdown control on both positions at the moment because it's still pushing. So is this Australian dollar weakness or is this pound? Yeah, so Aussie's weak today. And the pound is strong. So the pound odd is obviously probably going to get an ADR on this today because it's strong against weak. Yeah, good opportunity for short, nicely extended, beautiful high. Potentially we'll find some sellers starting to kick in. Propulsion gaps galore to the downside. That one's done. That one there. Big one there. So the more downside targets you've got, the more likely it is. So, you know, if you can count 5 downside targets and nothing to the upside, you know you're getting close to it needing to come back down again, because it means you've had a strong move. So, you know, you could use these targets. The more of them you see, you could use those instead of the RSI. So, you know, all this is a condition indicator. It tells you the condition of the market, the relative strength of the two currencies. If you've got tons of propulsion gap targets to the downside and you can't see any above you, you know you've also got a very strong move, don't you? But you can see it on the chart anyway. More RSI extensions on the yens. All yens. So CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand yen, US yen. All 70s. Nothing's quite got to 75 because we've basically pushed up and we've gone into a bit of an accumulation now on all these yens. We're just pausing at the moment. Exhausted. So this is either going to turn into an accumulation break or a flag. Break long, or we're going to turn into a pullback. So this is the time, yeah, on all these yens, all these ADRs on the yens. So all of them are pausing. So you've got on 5 minute, you've got all these reversal alerts, which are potentially just about to trigger. So your choice is short them into propulsion and get out. That's likely where we're going to start the next bounce from, either the high before the propulsion was formed or within the propulsion itself. Or, yeah, I mean, they're all pretty much the same. They've all got pretty much the same sort of reverse alerts. Or it's going to fly, isn't it? So you choose. I like them actually short. I think that's a big move. 225 ADRs always have some kind of pullback. But if you just go for a small pullback, if you just went for like a third of an ADR on them, you'll probably be safe, I think. Even if it's going to flag and not come all the way back down to retest this, you should be able to get a third of an ADR on some of these. That's going to be 26, about 40, somewhere around there. So look at where the previous resistances are. Yeah, little one there. That's not really far enough. That's just about manageable. That would obviously be perfect down to here, but just make sure you've got enough room for about a third of an ADR drop down to the next resistance or support. So this one, you're selling straight into potential resistance. Most of these you probably are actually. Yeah, so down to there. We eat spam in the US. I know. I think we do have spam in the UK. It's not just a forehead. It's also a Monty Python song. Tony, the new Trading Nut YouTube vid is a guy with 95% win rate. It's beat the market maker. He had 800 moving average and the TDI. The TDI only had one line on it and the Bollinger Band lines. He entered on the 4 hour. How long is that 95% win rate over? I can get a 95% win rate on 10 trades. No, I can't. I can only get a 90. We call spam corned beef. No, corned beef is something different to spam, isn't it? Spam's... I don't know. Corned beef I quite like, actually. It's an acquired taste, a bit like Marmite. So basically, he's using Steve Malraux's strategy, is he? So yeah, funnily enough, what he's doing is trading shark fins on the TDI. That's all it is, isn't it? So basically what this is an RSI. So this is going back to the bootcamp. This is the TDI stripped back, naked. The base of the TDI is an RSI, median. That's exactly what I use on the chart. So I'm doing exactly what he's doing, but I'm not using the Bollinger Bands. So he will be, my use for it is showing extended market conditions which are due for a bank pullback or bank profit take move. He's using it for extensions outside of the norm. So he's using the Bollinger Bands basically. And he's only doing it on the 4-hour chart. Oh, wrong one. Oh, I can't attach it. You not put Bollinger Bands on the RSI? So, oh my God, you can't even see them. Depends what he's using, but if he's using a standard deviation, so he would have a signal 4-hour, signal long, signal short there. I guess when it closes down below, he's probably taking it, isn't he? So there, and then he would have a signal long there. We're getting ready for a signal short there. So yeah, might work. Don't know. I'll have a look at the trading, that podcast. Oh, it's pretty good actually, isn't it? Back testing. That might have been a loser. Sideways. Did eventually go. There. So the thing you've got to, with this type of strategy, the thing you've got to, when you're visually backtesting it, the entry condition would be on candle close below the Bollinger. So you would always be getting in at the end of that 4-hour candle. So as long as the stop placement is above there, you've got to have a positive RR on it. So you'd have to, I think, be picky about the entries. So this one back here, for example, I'll watch the video because I can build an EA to backtest this very quickly. But for example, this entry here, is that candle. So that candle there was above the Bollinger. That candle there was below the Bollinger. So that is your entry candlestick there. There's your entry. Your stop loss would have to go above the swing high. So to be able to get a decent risk reward on that trade, you want to go just above it, wouldn't you? Yeah. So 1.5 R is there. That would have been hit. That's a 1 R, sorry. So 1.5 R just about hit there. So that's your hold time on it for a 1.5 R. 2 R, you've never hit. So with mean reversion strategy, you're always looking for somewhere between 1.2 to 1.5 R the vast majority of the time, because you can't, anything above 2 R is trend breakout territory. You're not going to get a 2 R on a mean reversion, very rarely. you will do, but I mean, you'll have a massively low strike rate. So you're only ever going to go for 1.5 R. So you've just got to, I think, look at the distances to improve it, and only take the trades where you've got a decent distance. So that candle for that whole move there is 200 pips. ADR on this is 127. So that is a 1.5 or 1.25 ADR stop loss, which means that your TP has got to be about 2 ADR. We know that 58% of the time the market spends it within ADR. So that's why it took so long to hit that, because the target was a long way away. So it could probably be improved by, and he may well be doing this. I haven't watched the podcast, obviously, but he may well be selecting them based on max stop loss distance being X. So if you can get into those positions with a max stop loss distance of 1 ADR or 3/4 of an ADR, you'll probably find that your time in the trade will be a lot quicker and a lot shorter. You might be able to get better risk reward out of it as well. So these are all things you test with EAs when you build them, which is why I spend my life building EAs. But yeah, looks like a good strategy, that. On the 4 hour, drop down to M15, you'll probably find you get chopped to death on it. I haven't got it on there. Yeah, I mean, you will also find with, and this is why I didn't like Steve Mauro's shark fin entry, because, and this is why I trade the way I do. I wait for the extension and then I get in above. I don't wait for it to come back down, because what you find is when you come back down below the RSI high level, you've missed. Look, there's a prime example actually on the chart now. Look. So we got extended above, then we crossed below. So we missed all of that movement there, which is 32 pips, an ADR. So we missed an ADR of movement waiting for the RSI to drop below. And it's the same with the Bollinger Band strategies. When you drop below the Bollinger Band, or above the Bollinger Band in this case, you've missed quite often. You've missed all that. Whereas if you got in with a reversal alert when you extended beyond the Bollinger Band, much better. That might actually be a good alternate entry criteria. Instead of using the RSI extensions, using a outside Bollinger Band as your initial entry criteria for position trading entries. That might be good. Might test that. Good one. Thanks for pointing that one out. I will bookmark that. Watch that. Just seeing if he's got any examples. No. This is the annoying thing about this Trading Nut podcast. You get very little. It's just literally talking, which I can understand. It's a podcast, but I kind of want to see chart examples and stuff. Anyway. Anywho. Sorry, let me just quickly check what's going on with the DAX. Lovely. Okay, so DAX ORB short is playing out very nicely. It's about a 1R at the moment. Finally. So I've stopped out on the long, unfortunately. So I'm pretty much break even on that, I'd imagine. Yeah, just under at the moment. If the oil, sorry, one sec. God, I'm way behind the chat. Sorry, gay rat. If the oil will have long trend for the next week, does it mean we will watch strengthens of the CAD? Yeah. So the Canadian dollar is related to oil. Oil is basically Canada's main export. So when oil prices go up, it's the same as anything. Wholesalers charge more based on what's going on with the pricing. So there are caps and things in place, but as oil prices rise, the oil exporters tend to do a little bit better because there's more money comes into the oil industry and it all just trickles down into the currency. So you tend to find the Canadian dollar weakens on weak oil pricing. There's a lot of other factors, obviously, that go into it, but it does have quite a big impact on it. So if we are going to see that, we will see some strength in the CAD. So things like this Euro CAD and the Pound CAD, when we see the oil pricing starting to rise, there we go. We've just had that lower high put in on the Pound CAD, by the way. We're looking at this one. Nice big bearish engulfing. So high, low, lower high, potential down into there. So yeah, so we will see the Canadian dollar start to potentially rally off of that. So you recommend strength set to 0 for hourly? Well, that's what I use, Sahil, but it's entirely up to you. What the strength reading or the setting does is it basically says the propulsion candle has to be bigger than nothing, right? So it just has to be big. If you set it to 1, what it's saying is the propulsion candle has to be bigger than the candle before it. If you set it to 3, it means the propulsion candle has to be bigger than the 3 previous candles, 10, the 10 previous candles, 20, the 20 previous candles, etc., etc. So by definition, what it means is the higher you put that, the stronger that move has to be. The bigger, the stronger the propulsion move, the higher the probability of it pushing away. And then you've got a mean reversion entry back in to retest it as a target. So it's entirely up to you how you set that. And I would encourage you to go and play around with it. Try different settings and see what works for you. But if you go with a higher setting, you'll find, there you go. So that one, there was one there, look. That one disappeared because that propulsion candle there wasn't bigger than that one. So it wasn't bigger than the previous 10 candles. So what that setting is designed to do, yeah, the best propulsion candles are the ones which come after an accumulation. So you get an accumulation break. So it's a breakout, basically. What we're looking for is an accumulation in price and then the banks to start their move with a big, strong buying frenzy, which means that everybody that was short in that is stopped out and that's the end of it. So that's what we're looking for. So if this candle is bigger than the previous X candles, that is replicating that scenario in play. So you can see here, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 22, 23. About 24 candles forming that range. This one was bigger than every single one of those. So if you set this to 24, you'd still get it. 25, 26, whatever. So all it's doing is it's just a filter out the weaker propulsion moves, because a big move like that, where you've had a big strong candle there and a big strong candle there, and then you get another candle which is still big and strong but not as big as those two. If you set that to 0, you'll get a propulsion gap. If you set it to 1, you won't, because this candle is smaller than that one. So where I say on the 5-minute chart, you quite often get loads and loads of propulsion gaps. So you see this one here. There's a propulsion gap there, right? But that isn't showing at the moment because 1, 2, 3, 4 candles before it, we had one which was way bigger. So if I set that setting now back down to 5, for example, you still won't have it. If I set it to 4, though, nope, 3. Oh, now you get it, because that candle is bigger than the previous 3, but not bigger than the previous 4. Yeah. So again, it's entirely up to you. I like to see everything. And then I can make my own mind up as to whether I want to use it or not. Propulsion gaps have all filled on the DAX short. And we're sitting in this nice 3-bar reversal there. It's been rejected, so that's a good exit. $60. I'm just gonna let it run today, I think. So ADR low. If we get down to ADR and tap that, I'm going to get out manually. That'll be a pretty much break-even trade today. That one. Morning, Neo. I'm off for a boatload of uni work. Catch you later, outro. Less confusing. Just tuned in. Have you done New Zealand dollar Swiss? I don't think I did this morning. So have buys on this at the moment. New Zealand dollar Swiss, obvious target there and there. So again, these are the really nice ones. The accumulation, break, accumulation, break. So the propulsion candle breaks all the previous lows. It's a breakout. That is strong bank movement. It goes into another accumulation, and then it breaks out of that accumulation. Short. That's another one. That's what we're going to come back up and trade into. Yeah. So long. But the long was from ages ago. I mean, I've been long on this for a couple of weeks now. Aussie dollar, US dollar. There's our first ADR outside of the yen pairs. Very, very, very weak Australian dollar today. This Aussie's not happy today at all. And we got strength in the US dollar. So Aussie dollar, US dollar is coming down. So there's potential ADR reversal there. I've got one on that long already on the H1M5 coming down on the DAX. So again, US dollar CAD ADR. So again, US dollar strength. So potential mean reversion, drop down M5. Nice tight reversal alert on that as well. So you get a nice trade off that today. Just wait for signs of strength. DAX is coming down to ADR. Okay. So I'm just going to take that off. So that is basically that undoes that morning loss, the first breakout long loss. So I'm flat on the DAX, out at ADR and the propulsion gap. It's probably got a little bit more left in it, but I just want to get out. Spam is not corned beef. The almonds is, yes, it is not corned beef. Spam is, I don't know what is spam? I'm not sure I want to know. It's pork. Pork with ham, salt water, potato starch, sugar, and sodium nitrate. Not pretty, is it? I mean, it's just not pretty. Who invented it? I mean, what? Why? Why make something that looks like that? If we have an apocalypse, zombie apocalypse or a nuclear war, I reckon spam is going to be quite important because I would imagine it's got a shelf life of about 20 decades. What's 20 decades? 200 years. Why did I say 20 decades? But anyway, yeah. German GDP down on forecast. Spanish CPI is down as well. So support on the DAX. So if you are short on this, it's up to you if you want to get out or not. But I'm out. Oot. Spam is spiced ham. Oh, is that what it's? That's why it's called spam. SP. That's clever. Spiced ham. Spam. Can I look at Euro odd? So Euro odd having a little bit of a push up on this Australian dollar weakness at the moment. So again, this is potentially a flag formation for a new leg up. Hopefully we are going to come back down and do some of this, but these tiny little propulsion gaps down here, kind of want to get out of this, to be honest, but not great at the moment. It's just stuck still in this Aussie dollar weakness. This Australian dollar's had bad news and it's just hideous at the moment, and the euro's potentially got interest rate rises coming next week, so I wouldn't be surprised if we do put in another leg. Just look at where you're going on it, which again is daily. Not far away, actually. The next kind of decent recent support is there, which isn't far at all, 175 ADR. So that's where we fell shy. So I'd imagine if they've enticed all those shorts in yesterday, the liquidity's there. It would make sense to come up and do a 175 ADR move over the next 2 days. And then that will be your M pattern stop hunt reversal. Looks good. Different commodity entirely. Ham products, yeah, no, not good. Then we must not eat spam here, or we just call everything corned beef that is in a tin. You know, corned beef is very different. Corned beef. I love corned beef. Not quite sure about the ingredients. Oh, that's a good idea. Look at that. Gherkins, melted cheese, and corned beef. Toasted sandwich. Yum. Not so yum. That looks like someone's just thrown up on a plate. Oh, my dog's done stuff like that. Sorry if you're having your breakfast. Suddenly I want to trade spam futures. I'm not going to look it up. I'm pretty sure there is. I bet there is. Who makes spam? Who's it made by? Probably the safest company in the world, isn't it? It's been around forever. They've got a very, very, very slow website. Very slow website. Okay. Hormel Foods Corporation. They've got a ticker, $40 a share. How's spam been? Spam's doing well. Spam's all right. Stable stock, spam. Obviously a high supply demand product. Just watch the strategy vid. It's 16 minutes long. The vid underneath. Indicators work is the title. Ah, was that? Oh, where did you find that then? Why do I not use TradingView? Because I use MT4. Why do you not use MT4? I asked about oil and CAD because of breaker retest happened in oil on the weekly. I don't think the weekly's too long. How difficult would it be to grade the color shade of the propulsion gaps based on the strength of the gap? Quite hard. You'd also have to come up with an algorithm as to what you class as the strength. Yeah, you could do, but I wouldn't. Why do I not use TradingView? Why are you shouting? I've just told you. I use MT4. Why do you not use MT4? I love it when people come in and say, why don't you trade this? Because I trade other stuff. Why don't you trade what I trade? Like, well, I trade gold. Well, I don't trade gold. Well, I trade gold because it's better. Why is it better? It moves up and down and sideways, the same as every instrument and commodity in the planet. Doesn't matter what you trade. Doesn't matter what software you use. Same thing applies. I just like MT4 because I'm really old. Have I looked at pound odd? Pound odd. I think I have, haven't I? Yeah, so that's the high rejection. There you go. So we were looking at the pound odd and what it could potentially do. There's your high sweep. There's the liquidity gone. So your reversal alert was there somewhere. That's now invalid. You've got a new reversal alert put in there for short back down into here. Somewhere. So we'll see if that holds basically. You're about to get a 15-minute reversal alert. Really nice tight reversal up there. So there's a lot of limit orders triggering at that high. So we pushed up straight back down through it, put in a new lower low. Yeah, so that was the push through. So we've rejected it 3 times, enticed the sellers in. All the stops are gone there. Bang, taken out, push back down, new lower high. Sorry, new lower low. Double top, double bottom. If that breaks, there's your reversal alert. We should be good for a short. Assuming this Australian dollar actually doesn't stay dramatically weak all day, then obviously it's just going to fly up still. Thanks again for another great week. Appreciate your help and advice. Cool. Spiced mutton and ham. Wartime measure. Is that what that was, Spam? Oh, spiced mutton and ham. No, that's smart. World War II. Wartime food, yeah. Americans during World War II need that sodium nitrate. So you said something about Aussie dollar, US dollar. Did I? It's coming down. It's ADR. That was an ADR hit. Spam was introduced during... We've gone into a spam lesson. This is a good one. I'm going to have to snip this out and put a Why Traders Love Spam video title. I bet it'll get loads of clicks. Spam was introduced during the war for exactly those reasons. Apocalypse, probably well behind the time thread now. Yeah. What's the shelf life? Let's have a look. Oh, can't. 3 years. So when the zombie apocalypse happens, we've basically got 3 years to survive on spam. Then we're going to have to start eating the zombies. There we go. Looks a bit like a zombie, doesn't it? Oh, it's just horrible. Can you freeze spam? It's just horrible. But look, spam sushi someone's made. Oh, I love it. Fried spam. Spam eggs and spam. I'm crying now. Hey, oh my God, can we get off this spam thing? The chat's just gone mental. I can't actually see if anybody's talking about trading. Always eat it when I visit Germany. Oh my God. Sausages in Germany. We grill it and eat it with veg. Regarding the DAX, could not use the RSI extension as a gauge to get out rather than a propulsion gap. You could do, yeah. Use whatever you want. There you go. Propulsion gap is filled. Straight back down into 125 ADR, which is the previous weekly. Can't go any further, but that's a previous weekly level there. Previous weekly high. Still in this range though. Yeah, so I'll be looking for longs down here. Lots and lots and lots of buyers stepped in this zone here. Yeah. So this is equivalent move of that and that. Back up. So if you're in DAX shorts, I would be thinking carefully about getting out. The reason I don't use relative strength index with the DAX is because the big strong moves in the indices are usually caused by sector purchases, and it is people buying stocks up. Those stocks don't necessarily then get sold back off again. They just buy them. So you could use RSI, and RSI will work on everything, but I just found the RSI not as effective. So propulsion gap targets are much better, as you can see. Easier to identify. We know they get retested over and over again. It will come back up here. So, you know, when you're going long from down these lows and you're playing this range, if this range continues and you're going long from down here, you know where you're going with a very high degree of certainty. Some news just came in then on the euro. Banks index down 2.3% on track for biggest one-day drop in a month. Eek. So be prepared for some Swiss franc strength potentially. So this is why this is dropping. The DAX has a high percentage of banking sector as well. BASF, so Commerce Bank. Oh, look at all the motor stocks dropped again. Look, Daimler, Porsche, my poor Porsche. BMW, Deutsche Telekom, Volkswagen. So yeah, a lot of sell-offs at the moment. Very little gain. Deutsche Börse, that was the stock we looked at yesterday that made a massive loss. That's recovered today. So BASF, big drop. Commerce Bank. So that's why we got a DAX shorts at the minute. So be careful with this. If this is another we hate the banks type move, we may find this continues. Shouldn't have got out, should I? Never mind. Hindsight, beautiful thing. Got memories of cool dishes with spam. Here we go. Okay. I've got to stop talking about spam because otherwise you're not going to shut up about spam, are you? Newman, which indicator do you use? There's a scroller going along the bottom of the screen with a link to the website. I don't use one indicator. I use a suite of indicators. Everything you need is on the website. Too much spam in this chat. We are just spamming about spam. I like MT5 glitch. Yeah, that's right. MT5. This is a prime example, right? MT5. Yeah, I've just redone the indicator for MT5. Yeah, here it is running. This is development version of the indicator, right? So all I've done is I've converted the code over into MT5. Yeah, except half the stuff just doesn't work. So if I reset it all, so this is the propulsion gap, propulsion resistance indicator. Yeah, so MT5 decides it actually likes everything aligned to the left, not to the right, for for some unknown reason. This all works absolutely fine. Yeah, so it's got a true false, show or hide. So all the true false does in the inputs is say show or hide all the functionality to do with the indicators, right? So I turn that off. It disappears. And it comes back. Literally, that input says to MT5, do not use this block of code. And it goes, all right, I really like it. And it puts it back. The candle timer. It's the simplest bit of code in the world, the candle timer. On tick, how many seconds until this candle closes? Calculate it, display it in the corner. Nah, don't want to do it. This is the problem with MT5. It is buggy and glitchy and horrible, and it takes ages to update. I move over to M15. Hang on a minute. Let me have a think about that. Okay, I'm coming. Well, here's your chart. Hourly. And then half the time it loads the chart, but doesn't load the indicators. You have to wait another 10 seconds for the indicators to load. It's just crap. Couldn't run a live room on MT5, could I? We'd be sitting here for half an hour just watching. I should play some music because it just doesn't work. This really doesn't work today, does it? Look. This is my Darwin X account. There we go. Where's my support and resistance lines? You're probably still calculating them, aren't you? Because you put so much pressure on my CPU. Oh my God. I didn't spot that. Oh, there we go. See what I mean? Right? This is a straightforward MT4 to MT5 conversion. This is why I use MT4, and this is why I code for MT4. Where's the support resistance gone? But it's still, look, it's the graphical user interface in MT5 that screws everything up, look. Just bloody awful. Anyway, that's why I don't use it. So yeah, it's coming. The indicator. Aussie dollar, US dollar is at bullish resistance. Yes. Bullish resistance. Aussie dollar, US dollar is bullish to next resistance. Yeah. Well, yeah, I mean, it's a buy basically down here at ADR. However, this Aussie's not happy today, is it? So just be careful. Isn't there a Monty Python sketching about a spam? Yes, there is, definitely. It's a bit like Bologna. It's just machine recuperated meat of parts. Yeah, I don't want to read that one. And then they add some ketchup to make it look pink. Yeah. Same as when you go and have a McDonald's, you don't realize what's in the McDonald's. Everything. The entire cow is in a McDonald's burger. Too many sellers need to become buyers. Yes, of course. Spam making checks, blah, 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 on the D40 Cash M5. Just trying to whiz through all the chat. Yeah, just don't use MT5, basically, people. Use what you like, but obviously I wouldn't use MT5. You see the problems? I've just shown you there, right? That MT5, that indicator, this indicator here on this chart, which when I do this, it does that. And when I do that, it does that. And it all redraws perfectly. There's no artifacts left anywhere. It's just amazing. Exactly the same indicator with exactly the same calculations, doing exactly the same thing with slight language variations because the language is different, coding-wise. On MT5, it just doesn't work. You have to rewrite the whole thing. This is the problem, and this is why everything is built for MT5, but from a development perspective, building the market reversal alerts EA in MT5, right? In MT4, the whole development process for the market reversal alerts EA probably took 6 to 8 weeks from start to finish, ready to go. Yeah. MT5 conversion took over 3 months, and I'd already done the logic. I'd already done the calculations. I'd already done everything, how it draws, everything. It took 3 months to convert the thing. It just didn't work because MT5 as well, everything you do in there requires 3 to 4 times more processing power. So you have something in MT4 and MT5, it goes, sorry, you need to rewrite your indicator because it's too slow. No, the indicator's fine. The platform's too slow. Yeah. But MT5 or MetaQuotes in their wisdom go, let's just tell them that they need to recode the indicator. Works in MT4. So what's the difference? Your platform is the difference, not the indicator code. The indicator code has pretty much the same amount of lines in it, does the same thing. MT5 shit. That's it. It's basically the end of it, isn't it? So yeah, there we go. You found the crystal ball, propulsion gaps of the future, hanging way above the chart. It could be, Brian. That could be it. That MT5 version can predict the future. It knows where the new propulsion gaps are going to form. DAX is just out of 125 now. Let's just have a quick look at where we're going if we're going to break out to the downside. So where we are at the moment, remember we've got this target here. Can't quite see it because we've got a big propulsion gap which hasn't completed because there's gaps in it. Let's try and change the color of that to something that might stand out. There we go. So this is that gap. So we gapped up quite severely, didn't fill it, pushed up for the day, gapped up again, didn't quite fill that gap, pushed away. So we've got a very small gap target there and a very big gap target there. Gaps get filled. They always get filled on the indices. Very, very rarely we get an orphaned gap, as we just saw in oil. Gaps get filled. So this low here, which is the previous week's low and a previous monthly high, when we break this level, that's it. Look out below, all the way down to there, which is 155, basically, call it. Yeah, 155, pretty much. So you've got to drop down to 155, and then there's that gap and that gap. That gap down there, obviously, is 152-ish, something like that. So big drop on the cards for the DAX. So let's see if we can do it this time. We've tried twice with big days to get down. This is the biggest, strongest candle move we've had in the last, since 2 weeks ago. So last 2 weeks, basically. This is the biggest move on the DAX. So likely to get exhausted today. If we do break out of that low, I'd be very surprised if we don't pull back into the range. But once we've broken out of that low, we've now got new market structure. So obviously we've got market structure break to the upside there, which came straight into resistance and down again. So we've got high, lower high, lower high, low, lower low, lower low. So we are literally just still in a very slight downward channel. But the next break, if it's a shallow break, could open up the floodgates, seeing as this is obviously problems at the banks. So we'll see what happens with the DAX, but that's coming down nicely. I've missed all of that because I got out too soon, as usual. Here is a think why make more hard when it is already working in stable system. Kind of understand what you mean. Yeah. The MT5 was introduced basically for the stock market. So basically they wanted to trade futures. They wanted a version of MT4 which could connect to the futures markets, and the data feeds from the futures markets are completely different. They work on a different candle. The candle open close works differently, so they had to have a different charting platform. What they didn't realize was that there are a million better platforms already for trading futures. So no one adopted MT5 and it just died. 90% of the sales that I have and the downloads of demos and everything I have on the marketplace are MT4. Literally 10% of MT5. Just not adopted. Tried to build my own indicator. Lots of work. Yeah, it is. Lots of pain, as Diamond will attest to. 90% of your time is looking for a comma or a semicolon that is out of place. And when you find it, you're like, 2 hours. The amount of times I've broken things as well. And I've forgotten to take a backup. And then I can't figure out what I've broken. Just part of coding. Why can't they just introduce futures stocks into MT4? Because the charting is different. Open, high, low, close works differently on futures. So that's why. In theory, I mean, they could modify it, I guess, the MT4 platform. It would make more sense. But I think they've just given up. You know, there's so much more. Ninja Trader, Jigsaw, Bootcamp. There's just so many better platforms for futures. TraderVate, you know. There's absolutely no need for more software. And obviously you've got TradingView. Brian, by the way, found the catch with the Feedall Live account. Lot size limits, not an issue during evaluation phase. Now I got them. Load of spam. Lot size limits, is there? What's the lot size limits? They haven't updated their thing yet, have they? Because you can copy trade now, apparently. I know. Can't find it now, but yeah. They've kind of shot themselves in the foot, I think. This is the whole reason I loved Fidelcrest was that 5% target. It's gone. They're now 10. So, yes, thanks for the extra 30 days. I've never needed to use it, but I loved having 5% target, and now you've removed it. So I'm not really interested. I shall keep using my Forex funds and just a pain in the backside. See, I need to move them down now. See, that's not right. I need to change that. Must remember that I'll leave that page there, so that reminds me to change that. I'm going to change that to my top two, and I'm going to just use the 8 because these two are far above, I think, still. Look at the DAX melting. 157 on the cards. 150 ADR, so big moves. Does that mean the MT4 broker that offers commodities cannot be trusted? We need to compare with proper futures platform. No, with your broker, you are trading CFDs, contracts for differences. In the same way as you are trading CFDs on the DAX here. This is not the DAX. This is a contract for difference against the DAX futures market. Futures feed and the DAX CFD feed will be different. Very, very slightly. The price will be different. The movement will be pretty much the same. So yeah, there's nothing wrong with your feed that your broker gives you. It is an approximation of the futures market. CFD is contract for difference, not a futures contract. When you purchase a futures contract, you are legally obliged to receive that futures contract when it expires. So if you buy a futures contract in oil, when the contract expires, they deliver you a barrel of oil. With a CFD, when the futures contract expires, nothing happens because you are trading a contract for the difference between the price you entered at and the exit price with your broker. Your agreement is with your broker, not with the futures marketplace. Different. But you don't need to worry about it. It's the same thing. If you look at the DAX on the futures now, it'll be doing the same thing. I got 0.15 to 0.29 min max. Really? The lot sizing. There is also an insurance to take. Oh, I know. Yeah, I saw that. If you fails phase one, you can take it again free of charge. But it's 30% more expensive. I know. They're a lot of them are up to that as well. Yes, Sierra chart as well, as Henrik has just said. That's a really good futures platform. Morning, Anna. I am doing well. Thank you. How are you? What was I just going to say? Something based on... Oh, yeah. E8, still mil... Right, so watch this level down here on the DAX. 150 ADR. E8 have just changed their rules as well. So to me, this is not a good change. So the new E8 rule is on E8 track only. Balance-based drawdown. Watch this. So if you take an E8 track, it's a 3-phase cheap route to market. It's very cheap. It's $338 or something. 358 for 100k, which is cheap for 100k's of funding. But this thing here is not as good as equity-based drawdown. So equity-based drawdown is calculated from the equity of the account at the open of the day minus your drawdown limit. So let's say, for example, your open equity was at 95k and you had a 5k drawdown. You could draw down to 90k on your equity without having a problem. If you started the day in 3k of drawdown, you now can go to minus 8k in drawdown. With balanced based, if you drew down on your balance by 5k, you've lost. So if your starting equity was 3k in drawdown, or your starting equity was 3k in drawdown at the start of the day, you can only draw down 2k because you will hit your max balance loss. So it's worse. They're saying it's better because it's easier to understand. It's actually worse for the trader. If you spend your life in drawdown like I do, if you're scalping, it makes no difference whatsoever. So it only makes a difference to traders who have overnight holds. If you don't hold overnight, it doesn't make any difference at all. It's the same thing. If you do hold overnight, though, where we used to go from your starting equity down by 5k, we now go from your starting balance down. And if you're 3k equity, you're already dropped down there, aren't you? You've only got a little bit more to go before you blow. So be careful if you're trading E8. Only if you're trading E8 track, though. I don't trade E8 track. I passed an E8 track because I wanted to try it out, and I thought, oh, that's cheap. And I got paid out of the E8 track, actually. But I gambled it. So I totally gambled it. I did that in one day, and I did that in 2 days, 3 days, and I did that pretty much the same. So about 5 or 7 days, I passed all 3 phases. Lucky run. But yeah, why take 3 phases? It's obviously financially, it's cheap. 250k of funding for $600. That's cheap, really cheap. But you've got to do 3 phases. So you've got to make a total of 45k. On a 250k account, which is tricky, obviously. Okay, DAX is showing rejection at, so this is yesterday's low, this dotted line, and this is previous day's low, this dotted line. Yeah, so we're showing rejection at that low. This is where we're going to see the limit orders triggering. So everybody that is playing the range at the moment, obviously this is where they are looking to get in and go back up. So a really good spot for a buy on the DAX. Lots of targets to the upside, so probably worth a shot. Just broken below the weekly low. Yeah, literally 3 pips. So we'll see if that that holds. Certainly looks like it's getting bought up at the moment. So potentially good long on the DAX. Right, I've got to go. It's 10 o'clock. I've got to try and get this MT5 thing sorted out today. So hopefully that'll be done. If not, over the weekend, hopefully. And I'm going to go and watch this podcast. Did somebody say they saw a link to the actual strategy? I didn't see a link go in the chat. God, the chat's long today. Just been talking about spam. Literally, the entire thing is about spam today. Who was it was talking about it? Tony, wasn't it? He entered in the 4 hour. Just trying to find it in the chat. He showed around 2 months. He flashed the trade history up. He said shark fin. Yeah, okay. So, yeah. I just watched the strategy vid. It's 16 minutes long. The vid underneath. Indicators Work is the title. Oh, this one. Oh, okay, fine. Got you. Right. Okay. Blimey. Trading View's just crazy when it goes out. I can't get on with Trading View at all. So it's basically when the RSI is outside of, literally just trading shark fins. That's it. Might be a good one. I'll build an EA to test it. I'm trying to build an EA at the moment, a really good EA for prop, just to sort of try and automate my prop a bit more, because at the moment I'm doing a lot of manual on it and it's time consuming and annoying, mainly support resistance basically. So trying to find a good strategy I can build an EA on with a decent strike rate. The trouble with H4 is you don't get very many entries. So you'll find the entries will be, I mean, here you got what? 1, 2. I mean, that was a definite no-no. 3. 4. Possibly. 2, 3, 4, 5, 6, 7, 8, 9, 10. That's not bad actually, is it? 10 in a month or so. No, that's in 2 months. 10 in 2 months. So 5 entries a month on 4 hour. Sort of strategy you could go in with 2% risk on. Potentially, because you're not going to get that many trades a day. So you got like 8 to 12% drawdown on the account to play with. 1.5 hour. I can't see how he gets 95% strike rate though, because certainly there's nowhere near 95% strike rate there. So there's obviously got to be something else to the strategy. There's something else he's using. I will watch. I will build an EA, and if it proves profitable and I can do some system parameter permutation tests on it and it works, I will let you know. This has been fun. It has been fun. Lots of spam. So yeah, I'll be back tomorrow. No, I won't. I'll be back this afternoon at 2:20 for the New York session. A bunch of trend lines, moving averages, same stuff. Oh, is it? What is the web of this trader? What, me? You mean this guy, the Trading Nut? It's just Trading Nut. Do you not know the Trading Nut podcast? Very famous podcast to do with trading. Just Google it, Trading Nut. Still waiting for my invitation for Trading Nut. He hasn't come back to me. I haven't asked him. I'm just saying he hasn't asked me yet. So I'm sitting here waiting for him to find me. First 4 hour candle close is looking promising on the back test. Might be something. Yeah, I'll have a look. Right. So yeah, I'll be back this afternoon at 2:20 for the New York session. We'll see how we go with New York. Markets had a big free fall, obviously, today on the DAX. Yeah, US markets not affected, and we've got a gap. So yeah, US markets are not reflecting the. This is European banks. The Dow's coming down. The Dow's got a lot of bank stock in it as well, and the S&P. Yeah, so Nasdaq's unaffected. The S&P is coming down a bit as well, but you know these drops aren't anywhere near as violent as the DAX. Beautiful rejection wick on the DAX. Tweezer bottoms going in. Stop above the high. Sorry, pending order above the high. Off we go. Give it a go. May work, may not. Right, so back to 2:20 this afternoon for the New York session. I'm not here Monday. No session on Monday because it's bank holiday in the UK again. So I'm just going to take that 1 second. I will go in a minute. Just put a pending order above that last candle high. Stop under the low. Risk reward through the roof. So it's worth a shot on the funded, that one. 0.5% risk. So yeah, back this afternoon. Not here Monday at all because it's a bank holiday in the UK. So back on Tuesday. So 7:50 Tuesday morning for the next London session. 2:20 this afternoon for the next New York. Hopefully you have a good day. See how all these Aussie dollars fare today. See if we can find some strength. Looks like it's starting to potentially turn around the Aussie. So we'll see what we do. Yeah, it's turning around nicely actually. Aussie and the Euro CAD, I'd imagine. Sorry, Euro odd rather. So hopefully you have a good afternoon. I will see you later. If not, I'll be in the Telegram group if you need anything. Other than that, I will see you guys soon. Have a good one.